Hi, I'm Luke Norman. I'm the chairman and co-founder of US Gold Corp. We are a NASDAQ listed, symbol USAU, copper gold pre-developer, now a developer, located in the US.
Look, it's we've not met or spoken before, so I appreciate coming on. We caught up with George last September at Beaver Creek, and hope to again this September. Right, let's talk about what's going on there. When I saw this last September, I kind of walked into the room prepared not to like it, but I walked out as an absolute buyer. I thought it was a great story. Small but perfectly formed. So CK Gold, what's happening there at the moment?
Okay, so CK is our flagship project. It's located in Cheyenne, Wyoming. Just to give people scope, Cheyenne is about an hour and a half due north of Denver, Colorado on the highway system. So it's in southeastern Wyoming. We promised the market 3.5 years ago that we would put together an economic base case or framework for this project and would get it permitted. And fast forward to April of this year, and here we are, Matt. We're fully permitted, and now we're moving into the next phase. And your question, what's the next phase? Production? Well, I'll hopefully give you a little bit more color on that.
Well, why don't you do that? Why don't you remind people kind of what the economics look like? Broad headline numbers, please.
Yeah, certainly. So our last pre-feasibility study was completed in December of 2021. It constituted 1 million ounces of gold and 248 million pounds of copper. Long story short, the economics on it were about an $800 AISC. So that's all-in sustaining costs. I'm sure that you can explain that better than I could, but our $800 all-in sustaining costs were derived from $1,625 gold and $3.25 copper.
Right. Okay. So and obviously today's prices, I guess those numbers look even healthier. You talked about being fully permits. There's no outstanding permits. If you wanted to, and you had the money today, you could get going.
Well, not entirely true. We have one last air quality permit to come in, but that's just a little bit laggard. The real drivers were the industrial sightings permit and the permit to mine, which we've received. The permit to mine, of course, was conditional on air quality. I'm sure you can imagine in the high prairie country where we are, the air quality is not going to be an issue.
No, one would expect not. Right, so it's pretty darn close, and you kind of move through the stages quite expediently. So which is good news. It's a difficult market out there, right? It's been 3-4 tough years for certainly
5, 6
juniors. Right, 5, 6, 7, 8, 9, 10. Yeah, it's a tough time because money's hard to come by, and if you do get it, it's expensive. And then you move into that kind of alternative financing territory, which can be complex, and sometimes needs must, etc. But so, how are you advancing things in terms of the financing, given your 60 million market cap? You had a nice run on the stock price, which was always nice to see, but it would feel a little bit expensive if you went now, wouldn't it?
Yeah, actually, very good point. And it's funny you bring that up. Where right now we have spoken to all the normal course lenders in our industry and said, hey, we're open for business. Come to us, propose to us. And we're getting those propositions right now. But the reality is, we're not reflecting, our $60 million market cap is absolutely not reflecting the value in the CK project. Why? Because we're reserve level, we're permitted, we're one of only a handful of projects in North America with that, level of advancement. So we don't have to race out the gates and wreck our equity. In fact, more importantly, we have a whole slew of different elements to this project that came up through both our permit process and engineering that we think are optimization points that could actually increase the value of this project on a project level. So, look, we're in discussions with the normal course lenders, but I think we've got a very good shot at attracting money from non-traditional sources of capital.
Okay, alternative financing, always interesting. But lots of people talk a good game, but very few get over the line. So what are the options for you?
Well, I mean, look, obviously there's copper has joined the critical mineral space in the US. So there are federal grants out there. We're not chasing federal money because we're on state ground in a very mining friendly state. So that's how we managed to get permitted so quickly. So we're not going to chase the federal money right now. However, we again in a mining friendly state like this, there's a precedent set in Wyoming for municipal bonding to put up to 50% on capex. Plus, like I said, there was a whole myriad of advantages to this project that we discovered through feasibility and through our permit process that we think are going to attract interest from other sources. And those are, there's a slew of them, and I'm happy to get into them, but I'll let you keep asking me.
Go for it. Go for it. It's really interesting to me because companies, during this sort of, this period of difficulty, should we say, for juniors, have had to change their business model, change their business plan, change the strategy that they're going to need to employ, and sometimes even change the people, quite frankly, to be able to do that. So I'm always intrigued. So you've been looking at, you can optimize till the cows come home, right? And, if the market doesn't care, you're sitting around a waiting game, you're not in control. But if you're looking at alternative financing, that's one thing. But if you're looking at alternative projects, is that what you're saying? What are the options that you're looking at?
Okay, so first let's sort of peel back a couple of layers on the onion. This project sits abutting a state park, okay? And that was one of the biggest, I guess, hairs on the dog that people were concerned about this project moving out of the gates, right? So we were always discounted with this project. People looked at grade as potentially being an issue and its location being an issue. And that was 4 years ago. Fast forward to today, we completely disproved any of the grade questions around the project with a remarkably robust economic framework in that 2021 pre-feasibility. And we also, the question about the park never even came up through the permit process because it's just well located away from the park. Well, what we did discover through this phase of permit and through this phase of engineering was, lo and behold, 2.5 miles to our south is Martin Marietta. Martin Marietta have an open pit. They are mining the same granodiorite that our ore body is hosted in and selling it as rail ballast and aggregate for $20 to $25 a ton. Well, we have 35 million tons of that exact rock, actually slightly different, but similar enough, rock sitting on surface, mined for free through that pre-feasibility, with a called a $20 per ton price tag on it. So there's $700 million worth of rock that we can explore. How can we garner value from that? We definitely can sell it because under best use on state ground, that's already covered. We own that rock, we own that aggregate. So with that comes all sorts of other benefits, and again, it entices non-traditional mining companies who may want to partner on the project, and we've had several approach us, all the way to being more of a materials project. We can look outside of just basic mining lenders.
Okay, so materials, aggregates, a lot of rock sitting at surface, presumably, is what you're saying. Someone's got to pick it up, put it on a vehicle of some description and get it to where they need to go. So that $20 soon dwindles a bit, doesn't it? So how do either you've got a big capex project, or someone else has got to try and put that project together in their own time frame. So how's it looking?
Actually, the increase in capex is minimal. And let's take a look at that. We've done a ton of work, obviously, looking into the mining side of things. So when we permitted this, we permitted it it was a minimal amount of traffic required to move 6 or 7 truckloads of dry concentrate a day, which is what the mine will ultimately produce through the copper gold portion of it. For the aggregate, it's a little more complicated. You've got to move 30 million tons or 35 million tons of bulk commodity, and you want it up and gone in about the time frame that you're mining. So give it a 12-year period. But we've been approached by a large senior railway in the US. They're desperate for rail ballast. And hey, railways specialize in running rail, just like our power. I'm not running power to our project. Black Hills Energy is, and they amortize it to us. So it's the same concept. And Matthew, I'll go even further just from an investor perspective, why this would be important now. We've spent up to 30 million US getting us to the point in time that we're at today. So that's reserve and permits. We didn't chase a bigger deposit at depth, which definitely exists, but we could have burned through another $20 million, bringing the reserve higher. And likewise, with these optimizations and beneficial add-ons or tie-ons to the mining project, it doesn't rely on a ton of capital. So these are all positives that are going to add to the project without anyone undergoing a whole ton of dilution. So I think that's why, as an investor, I'd be excited by this.
I'd be excited. Well, I'd be excited if you put some numbers on that. So in terms of like trying to understand how the economics could work for you, whether someone else funded it and amortized that over the period, 10, 12 years, whatever, that would be great. But how long would it take for you to actually put some numbers together, which you could put into the market so people can go, I can value that, and I can, hopefully, appreciate what the opportunity is.
Welcome to our summer and fall.
Oh, fantastic. Good.
Yeah. Good. That's exactly what we're working on. That's the next phase of this company is to finalize discussion with the community and with the state, and with, we've got 2 aggregate specialists on payroll who've been working with us now for a year and a half. So we combined planning and putting this together so that we can add it to those top line numbers, because I think those in the top line numbers, again, let's talk back to our top line numbers. Sorry, Matthew, for going a little bit tangential here, but we have a $60 million market cap, and like I said, about 1.5 million ounce gold equivalents reserve. In any normal case, I keep using normalized, but I will continue to, market conditions in our space, we would be trading somewhere in the region of about 0.8 of our net present value, which is about a $323 million net present value. Now, if we bring the aggregates in, that's going to move higher even more. So, it's going to move dramatically higher. So we want to fill that gap, that void between our $60 million market cap and maybe, a multi-$100 million market cap that I think would be more reflective of this business opportunity. So bringing these other positives up and into the headline numbers is inexpensive, non-dilutive, and going to really help us fund this project.
Okay, so in terms of CK, bit of optimization going on, one small air quality permit to come through, and then you're ready to go.
Yeah.
But you need it to look, you need the company to be more than it is today before you want to press any buttons or take any money down on the gold project, irrespective. Surely exploration, do you feel that exploration is getting value? Have you got money to do exploration, even if you thought exploration could deliver value, perceived value in the market?
Well, the key to your question is, do I think exploration would add value? And the simple answer is no, I do not. We could try and add, like I said, ounces to the reserve and continue to dilute ourselves, but there is no point at this time. Anyone, as a peer group that looks at our deposit, looks at our previous exploration, they see that the mineralization continues to depth and it continues laterally. So that's not an overly a concern to us. As to us, reflecting back on a market capitalization and thinking we're going to sit on our hands and wait for Mr. Market to buoy us higher, that is never the way we would conduct our business either. And like I said, a very inexpensive way for us to create a whole ton of value is to start to explore this free rock that comes with our mine.
Right. Okay. Yeah. So let me, if you don't mind, let me just pepper you with a few questions, which I'm sure you'll have discussed ad nauseum at board level, I'm sure. So starter pits, that doesn't make sense, or no, you would be doing it, presumably.
Yeah, no, once you deploy capital and machinery onto the project, if you do it in a small scale, the economies of scale just don't make sense. You want to get in there, get this thing rolling.
Right. Prepay, what does that do for you?
Prepay, you mean like forward sell some of our initial production?
Yeah.
That's something we're certainly considering. Our richest year of production is year one. Our highest grade is at surface, by far, obviously the least strip because the mineralization is at surface. We have 126,000 ounces of gold, I think, and 24 million pounds of copper that we produce year one. So certainly selling 50,000 ounces forward to help offset that CapEx burden as a discussion point.
Right. Okay. Because obviously you're going to have the usual kind of debt equity ratio, 60-40, 75-25. I don't, whatever you can muster up in terms of interest. So the prepay is not off the table. Therefore, are you in discussions with anyone on prepay at the moment and NSR throughout all the alternative financing options? Where are you with the various conversations on this alternative financing?
Ongoing.
Right.
Yeah, look, my conversation with all the standard lenders and some already interested non-traditional investor groups is we're open for business. They come to us, propose something, let's negotiate, and that's already happening, behind the scenes, some discussions. But again, we're in a bit of a beleaguered industry right now, so people kind of think they can get extremely good terms because of that softness in our space. We don't have to race, we don't have to swim against the current. We can continue to have value here and wait for somebody to recognize that, hey, it's just too good a project to mince numbers on.
Okay. So you don't want to have those discussions from a position of weakness, and you don't feel you're there. So let's come back to the aggregates component. If you're going to be dealing with that this summer, this fall, what in terms of the various the variables in there? You said talking with locals and getting permissions, etc. Talking to off-takers, talking to railway, all of those kind of moving parts that you got to deal with. There's no way of knowing how long that will take, is there?
I don't want to set kind of a line in the sand or a hurdle right now, because we did do that through our permitting process and we met all our guidelines. But when I say we need to talk to the locals and then we need to talk to the state, both the local government and state government is situated in Cheyenne, Wyoming, which is 20 miles away. So there is just a process. Everything has been a process. And I mean that not in the negative framework of a process. It is just simply a process. So we're following the due process to get ourselves aligned with both state and local government so that we can find a solution, because look, the aggregate source generates obviously revenue for them, also royalties for them, and additional economic benefit through jobs, etc. So everyone in a mining-friendly state is excited by this addition to the project. We just have to work through tick the right boxes and follow the right process.
Okay. I noticed in your presentation you also talk about pit water storage opportunity. What's that about?
Okay, so post-production, and this is becoming more and more realized by both community and state. Post-production, we're left with an 86-acre round hole that runs about 700 foot deep. Now, I mentioned earlier the hairs on the dog sort of comment joke was our proximity to a state park. It's called Kurt Gowdy State Park. Well, Kurt Gowdy State Park has two lakes in it, two man-made lakes, Granite Lake and Crystal Lake. They are the water source for the community, for the city of Cheyenne. They're, again, man-made water reservoirs, and they just sit in the same granodiorite host that our deposit's sitting in. Their plan, because they're not meeting their requirements into 2040 and beyond, they need more capacity, is to increase dam heights and flood these two lakes. And what they do is also take out all the recreational sites. There's campgrounds, there's RV hookups and picnic tables and public washrooms and roads and everything. Their plan right now is a big spend and flood that park. Well, post-production, that 86 acres by 700 feet would more than double their current capacity. So it's free. So they've now come to realize this as well. That makes no difference to the aggregate story whether it does become a tie-in, but there's a very high likelihood that post-production CK will be an extension to the park.
Okay, yeah. Interesting. I guess that helps with relations somewhat. It's some ways out, but it's there nevertheless, or some value nevertheless.
Yep.
Okay, fine. So it's not a waiting game. It's a it's hold your ground until the right moment, and if you can try and share or show people the economics around the rock aggregates, then that could be enough to kind of get you over the line and get you moving, and actually, I guess closing deals around funding.
Again, it opens even more opportunity from a funding perspective. That's exactly it. We've had parties interested in just that waste rock alone come to us and want to do partnerships on our mining side of things. So it is value. It is within our project, and now we want to reflect that into our market capitalization.
Cool. That's a good update. Look, I think you've really kind of moved this project along since I last saw it was 11 months ago. And I say you seem to have delivered on what you said you were going to. I wish we'd kept in touch in that intervening period, but appreciate your time today, and do stay in touch a bit more regularly, and we'll see how you get on. Okay.
Yeah, likewise, Matt. Love to update you again, and now it's just going to get exciting. So yeah, stay in tune.